Hey, everybody. It's Friday, January 22nd. You're joining us on SmallCapSteve Live, brought to you by the Deep Dive Radio Network. Today on the show, we're going to have Justin Holland from Eguana. They just put out earnings yesterday. Going to get to pry and ask some questions. James Williams, who runs the Cannabis Manufacturers Guild, is going to be joining us later on. We're going to be talking some Canadian cannabis LPs, look at the market, see what factors are needed to turn everything. Not a ton of going on in the news today, but we're going to go through it quickly with Jay. And we're going to close off the week here on a strong note. All right, let's hit it, baby. Okay, well, let's scrap the intro because Restream's not working properly. Jay, can you hear me?
I'm just glad. I thought that was my internet, so I was quickly pulling off anything I could.
Restream has its issues some days. Today seems to be one of them. So you guys are going to get the great little intro that we made. We seem to be having less and less technical issues every day. Today, I don't know if it's my computer or if it's Restream or what it is. I don't really care because we're going to be joined by Justin Holland shortly, and we're going to get to talk EGT, which is a name I love. It's a name I don't think you love as much as I love because you don't know it as well. But if you did know it as well, you would love it as much as I love it.
Yep, I'll be honest. I do not know it nearly to the same degree that you do, but that's all right. There's a lot of names out there. We like a lot of different stuff, and we can't all know it all to the same degree that you know EGT.
How would you this entire time, 2 years ago, you're working in I don't know where you work, like an HVAC shop or something like that. Now, you're talking about small cap stocks on the internet. I know you're always afraid to make a public appearance. James Midas used to call you and go, "Come on, Deep Dive, come on our show." And you never do it. You don't want to be that guy. Now you're on the air every day with a clown like me. How has your week been this week in terms of just overall how hard you've been working?
My week has been insane. I don't know what has been or what's been going on the last 2 weeks, actually, but I haven't even seen my wife or anything. It's just been insane. I've got nothing scheduled yet for this weekend. Normally that's prepped by end of day yesterday at the latest. I mean, mentally, I somewhat know what's going out this weekend, but I've done no editing.
It's insanity. It's insanity. I'm talking to some bankers who are getting on phone calls at 10 o'clock and getting up at 5 in the morning because they know when we're seeing so much money being raised right now, and
the amount of money flowing in is insane. I commented on Twitter yesterday how is it investor sentiment or are we just seeing asset inflation? Because the money that has flowed into so many different sectors right now, I swear it's 5 times more than we're used to.
Yeah. So let's very quickly do a quick little 3-4 minute breakdown of the news here. First off, Pure Extracts. They have been a client of ours in the past. I'm not sure if they currently are or not. I believe we're long the name. Quickly, financing. What's happening here?
So yes, still a client, and yes, we are long. The company yesterday, I missed it yesterday because, like I just said, my week has been wild. Yesterday, they closed off the second tranche of their $8.5 million financing of special warrants. Special warrants have been issued at 50 cents and a half penny each. Each warrant converts to 1 unit of the company, with each unit containing 1 common share and a half common share purchase warrant at 65 cents. So yeah, great little financing. I mean, it's just another story in the space in terms of how much money has flowed into psychedelics. We've seen the same with MindCure, who just before we went live upsized their placement to $20 million. On top of that, Psych Wellness yesterday also announced a $3 million bought deal. There's just bought deals happening everywhere, and it has been wild.
There's just a ton of money flowing into all these small cap stocks right now. And it's great to see Pure Extracts. I think that their big opportunity is going to come in beverages. They're doing sort of that manufacturing Cannabis 2.0 story. I know that they're doing some stuff with psychedelics, but that's kind of that's sort of myself seeing kind of where I think that the opportunity is going to fall in for them. But Ben sold his last business to Tilray for a lot of money, so I assume he knows what he's doing. Okay, so up next here we've got Zen Abyss. They entered a $60 million credit facility to pay off their sundial debt. Very quickly, what can you tell me about this?
So this basically goes back to December 29th, I believe it was, maybe the 30th, when Sundial purchased just under $60 million of secured debt that was previously issued by Zen Abyss. A lot of shareholders thought Sundial was working with Zen Abyss in that purchase. That was not the case, as I had suspected from the start. Sundial has since issued a notice of default, and Zen Abyss is basically responding by saying it was a poor attempt at trying to foreclose on the assets. Now, there is some drama that goes back between these two. If you recall, late last year, a friend of ours, Max Cherney, actually covered a story where Zen Abyss said they received poor quality cannabis from Sundial that contained rubber bits.
Yeah, didn't it contain like people were buying cannabis that contained like pieces of pencils? Was that the story?
No. You're thinking of Terracen, a fluke there. This was where it was like bits of rubber glove was included within the cannabis scent. Max had photos and everything. It was disgusting, and Sundial evidently has had it out for Zen Abyss since. But yeah, so Zen Abyss this morning, they announced that they found a private debt facilitator effectively to secure $60 million from, so that they can pay off the debt owed to Sundial, so that they can basically walk. 10% interest rate is at the greater of 10%, or TD's prime rate plus 7.55%.
So this is non-convertible? Is this standard bank finance?
This is a credit facility. It's with a private lender, however. It says TD Bank's prime rate. And let me be clear here. Nowhere does it say that it's TD providing the debt. That's just what they're using for purposes of determining the interest rate. I know that there are some people on social media going, oh, this is great. TD is lending the money. That is not what has happened as per the news release. Debt is for a 1-year period. It has the same expiry as the debt they're paying off, which is January 21st, 2022. However, there are 280-day extensions available here, and they also issued just under 6 million common shares as a partial commitment fee.
I wonder how many people at Zen Abyss know the terms of this debt as well as you do.
Zen Abyss is a story that I have followed closely, not because I've ever invested. I think this thing's just a turd. Again, personal opinion only, but they just seem to be continuously diluting the hell out of shareholders. Shareholders, for whatever reason, just love this story. I don't get it. I probably won't ever get it. To their credit, they closed yesterday at 10 cents. Got no idea where they're at today. However, that's nearly double their 52-week low, which was just under 5 cents, I believe. So they are coming back a bit, but there's so much paper here. I'll be surprised if it heads much higher.
Speaking of turd, yesterday we talked to Turd Ferguson from TF Metals Report, and I asked him at the beginning of the call how he came up with the name Turd Ferguson. He gave us like a 5-minute story, and then at the end of the call, Jay, he's like, "I gotta ask, how'd you come up with the name Turd Ferguson?"
I had to run out to go to the washroom. I've been trying to drink more water to be healthy instead of coffee.
One of those awkward moments where you were caught red-handed that you.
Yeah, it's one of those. Oh man, but you win some, you lose some.
Yeah, he's an entertaining guy. Okay, so let's bring on Justin because we got a pretty packed show here, and I really kind of want to talk about Eguana. My favorite company, my favorite CEO. Justin, how are you doing?
Well, better now, Steve. That's a fantastic switch from the Turd Ferguson discussion to the favorite CEO. So I mean, that's when I first started hearing the discussion today.
Well, look at that! You got an Eguana mug. You got that beautiful sign in the background. You
got the charging battery on the back of the mug.
Okay.
I'd be willing to bet Steve would do some inappropriate things to get one of those mugs.
Yeah, I want one of those mugs.
I'm always open for new revenue streams, guys. So let's off air talk about how much value I can extract out of you guys for one of those mugs.
Okay, so So earnings, let's get right into it. You guys, 132% revenue growth year over year. This is the annual. You guys have one of those weird schedules where your fiscal or calendar year doesn't really add up. So that's the full annual for what you're calling fiscal 2020. What can you tell us revenue for the quarter that sort of, quickly kind of what drove revenue for the quarter?
I think, and I mentioned this in the conference call yesterday, and one of the major themes that's changing with the company now that we've positioned the supply chain and everything else that you're going to see is the conversion from a batch manufacturing system to a flow manufacturing system. And one of the reasons we're doing that is to negate the start and stop of the supply chain as we scale the company. And revenues, in the past, although, we've doubled up against priors and so on, we were still in that batch manufacturing type of facility. And from a supply chain standpoint, that becomes very difficult. What we've been able to do with the partnerships is we've been able to look farther into the future as to steady state, or what we call, and not that I want to take the group too far down the supply chain rabbit hole, but we're converting the production to a flow type environment where you have more materials on the inbound and the outbound side of the supply chain. And you have to have certain levels of demand to do that. We're seeing demand now get slotted into May, June, July, and further down throughout the year. That allows us to ramp up. So the increasing quarters are related to that switch from batch to flow. It does take some time to work through your supply chain. Again, we are still seeing some port delays as a result of COVID, but in a flow manufacturing setup, you can start to negate the impact of any of those port delays. So that's going to be, the big focus of the team in the near term this year is locking in flow versus batch. And that'll be the next stage in the scalability of the company. One of the things that have caused the starts and stops, and I think most of the long investors are very well up to speed and in the loop on this, is the battery module availability. And again, we spent a lot of time to diversify that because it's that diversification that allows us the predictability and the consistency to do flow manufacturing. So previously, we've been in a batch setup. Going forward, we're transitioning to a flow setup, and the manufacturing specialists out there should be happy to hear that that's being planned that way, because that's when you start seeing much more significant growth from a quarter-on-quarter perspective, especially considering the order book and the backlog that the sales team's been able to put together.
Okay, I noticed you guys didn't publish anything in the MD&A or the news release about the backlog. Are you able to disclose anything about that?
Well, just that we put the order book in, still north of 20 million, even with the shipments that we've done. We are seeing new partners. I think this is the exciting thing for the company now. Even working with the sales team after the call yesterday, they're looking at new partnerships. I think they will hit their objectives. They will go over 250 partners within the next couple of months. That translates into orders, and that then translates into the supply chain and the manufacturing. The specific backlog right now, that does change depending on what gets shipped, but the total order book with the contracts of the purchase order is still sitting north of 20 million, which is fantastic.
Okay, perfect. So you're talking about flow versus batch. Just so I fully understand this, flow means that you guys are just constantly building batteries. Batch means, okay, we got an order for e-gear in Hawaii. Let's prepare that as a batch. So it's now kind of like I worked at McDonald's when I was in high school, and when things were really buzzing, they just start throwing up Big Macs because it was so busy that they knew people would want Big Macs. Is that kind of the idea of flow?
Pretty close. It's pretty close. Basically, what we do is we would go into a quarter. We would look at securing the materials for that quarter or that period of time. We would convert that into units, and we would ship those units. And look, there's nothing wrong with batch manufacturing as long as you don't run into material hurdles or material availability delays on your incoming materials. It's just fine. But if you run into a material delay in a batch manufacturing system, that can slow your production rates by 1, 2, 3 months very quickly based on one one material issue. And what happens is companies will then get too much working capital tied up waiting for that solution. In a flow manufacturing environment, you've got constant materials in different phases of the supply chain. When we used to mentor people through supply chain, we would say, what's the lead time of a material coming in from Asia? And they would say, well, it's 8 weeks. Well, the first delivery is 8 weeks, but you can have as many boats on the water as you want. When you can time more materials in transit, allows you to do flow manufacturing and reduce the risk of any material hiccup. And that's where we're taking the company right now into that transition, so that we aren't dependent upon being stuck by one or two material delays as we really start to ramp up these quarters.
Okay. So I see gross margins. You guys did about 2% gross margin in annual 2019, annual 2020, 11%. What drove the increase in gross margin?
Yeah, the increase in gross margin, again, it's a combination of three, items. One is we cost reduce what we call the Evolve Hub, and the development team did a fantastic job on pulling about 50% of the cost out of where we were for the total EMS portion of the product. We've been able to cost reduce the cobalt-free system in conjunction with the Evolve Hub, and again, we've been working with our partners for better terms and better pricing on some of our main components. And those three things combined are what's starting to see that trend. We see additional room going forward as we start that flow transition. You're going to start seeing higher material orders, which again, economies of scale, which I'm sure people are familiar with, where we'll see additional margin opportunities because we are getting better procurement pricing. So that was the trend we said we would start to see around this time. We do expect to see that continue to increase, and we're quite confident that we'll see those plus 20 margins through 2021.
Is most of the manufacturing going to be happening in Calgary, or this is when you guys are kicking up with Jabil?
So we do have multiple partners, and again, we're looking at building a supply chain that can handle, tens of thousands of systems. Jabil's our primary right now in the European market. We are looking at additional support there. We do have very strong relationships in Calgary, but we will continue the transition to the outsourced manufacturing model. We think that's the best case scenario for the organization to allow us to continue our focus on the technology development. That's critical for the partners that we have, and I think we've got some very good partners, some very large partners. We know what their ambitions and objectives are, and we need to focus a lot of our energy and effort on making sure they have the best products in the marketplace. So we'll have manufacturing assembly facilities in high demand markets. They will likely be all transitioned to contract manufacturing before 2021, and we'll stick to that mapping so that we have that manufacturing capacity and the capability to deliver much larger revenue quarters for the company.
Okay, so the stock has had tremendous traction over the last few weeks, let's say. Something I wrote about yesterday when I covered it. Almost all the warrants, options, convertible debt, all in the money now. Does this kind of mean that you're not going to need to raise money for a while?
Yeah, there's two different times when you need to raise money. Some out of necessity and some for balance sheet and M&A purposes. So I'd hate to say that we're never going to raise money. What I'm happy to say is with the warrants and the support from Itochu, to go to that profitability standpoint, I don't believe we need to inject additional capital outside of those conversions. We're feeling quite comfortable with where we're at. And that was always the game plan. We focused so much on the technology to make sure the company had a suite of market-specific products, and I think we're comfortable in checking that box now. Then we focused on doing that, change to the flow and managing the supply chain, working hard on the working capital solutions with export development, Canada and Jabil and some of our other partners. And now we'll start to work on that balance sheet to clean that up. I know Sonia mentioned on the call yesterday that one of her primary objectives this year that we've discussed is to come out with that pristine balance sheet where we do want that debt off of the balance sheet. We have crossed the convertible threshold, which should take about $8 million off fairly quickly, and then we do have the warrants, which look like they will be early exercised, and that'll put more than enough capital that we need to deliver the order book and go to that profitable standpoint, which is very exciting for the group and hopefully for the shareholders as well.
Okay, not sure if you can give us much of an answer on this, but are you guys talking internally at all about looking at uplisting to some kind of senior exchange?
That's always been something that's been on the table. Obviously, companies don't go on the venture to live there forever. Internally we call it the hamster race. So that's always in discussion. I can't say that there's anything different right now, but it's something that gets tabled from time to time. And on that one, Steve, I'll leave it at that. Okay.
It's just obviously we're looking at all those sort of SPACs that are happening in the U.S. right now, and I keep looking at this little company out of Calgary, going, "Yikes! You guys are further ahead than a lot of them are, and they're going, at these huge valuations." I won't ask you to comment on that.
I can comment. I mean, we certainly watch that SPAC market pretty close, and we believe that at some point there will be a re-rating for the company, and they're going to start looking at comparables against some of the companies that are going into those SPACs, and for the internal management group, that just makes what we're doing and executing our vision even more exciting, because you're going to get that upside based on what's happening, particularly in that U.S. market right now, and the flow of funds coming in through ESG, the flow of funds going into the SPACs, particularly in the U.S. is really creating a phenomenal situation for renewables and specifically for companies like Eguana. So we are also keeping a pretty close eye on what's happening down in that U.S. market.
So how hard is it? I'm sure that over the years, and obviously, like we've seen, you guys were with Sonnen, who, effectively you guys built their power controls. They got taken out for a huge valuation, and then that ended. And then you were with Mercedes. Mercedes decided they wanted to compete against Tesla briefly. My understanding is they built a beautiful office in Southern California. They were going to take a real run at this. Then they decided, you know what, that might make sense for Tesla. It doesn't make sense for us. So I'm sure you get approached by a ton of interesting partners with interesting ideas that, like, at very first glance sounds really exciting, but it could just be a huge time suck, and you guys only have so much bandwidth. How hard is it for you guys to evaluate opportunities that you actually decide that you want to pursue or go down when a potential partner calls you?
Yeah, that's a good question. What we do internally is we make sure the team stays focused on the vision. And the vision is to create world-class products. And we do get opportunities coming all the time. And young growth companies can tend to, go down so many different pathways and spin their wheels. We do assess those. Obviously, I think a lot of the shareholders are familiar with Brent. Brent is, at the forefront of the industry on what's happening, the visionary aspect of, where virtual power plants are going, where renewables are going, grid modernization, and so on. And the people need to remember, he is also the founder of the company that did a lot of the development of the technology. So we, discuss quite often how something may or may not fit. And if it looks something that's going to take us off on a tangent completely off the vision, typically we'll set that aside, or we might put one or two resources on it only. But the bigger part of it is to keep the larger team focused on executing the plan, executing the vision, and fit opportunities for growth into what we're doing, to not get distracted and to continue to execute and build on those quarter over quarters.
Okay. I saw Cormark put out a note on you guys this week. Are you guys starting to receive a lot of inbound calls from banker types saying, "You guys want to maybe do a financing?" I'm assuming that with everything that's going on in small cap right now, those inbound calls are probably happening.
You might find it interesting. It's increased certainly. I wouldn't say that it's not increasing, but it's not increasing by much. I know Cormark was putting something out, and I also know the analyst He's been following the company for a very long time, and look, we take it as a pretty good win for the company that something has been put out now, and knowing the background of the analyst and how in tune he is with renewables and especially power electronics and what the company does. So that was a good box to check for us. But yeah, we're getting calls, but probably not increased over what we normally get as much as you might think.
Okay. The virtual power plant news. Last time you were on, we talked about that, and just monitoring social media, I can see that there's been a lot of interest when people are starting to put the numbers together in their head. A $10,000 a battery, $80,000 opportunity. You're looking at an $800 million opportunity, gigantic for this tiny microcap out of Calgary. Have there been any new developments there? What can you tell us, or even just sort of reiterate what the opportunity is for our audience?
Yeah, it's a big opportunity. We're very comfortable with our partner on that opportunity with Itochu. Obviously, they've vested in the company, and again, they're vesting in a number of aspects of the company. One being the technology advancement, one being the speed at which we can produce products and features for them. They are targeting 80,000 homes, but for the group, that's the U.S. objective. There are additional objectives in the Australian market, different markets in the Middle East. Itochu really is a global player, completely vertically integrated across renewables. But where, I think the excitement is for the company and hopefully for the shareholder base is we're not looking at a 2022, 23 type of rollout. We're looking to see some movement within 2021. They've invested in the installation capacity with a company called Sonova. You have to have that capacity to move that level of product. They've invested in the AI with Moixa GridShare AI. We've developed and certified the product for them, and we expect to see that start to roll out. That's the exciting part, and we hope people are understanding that the grid modernization in the U.S., especially now with the administration change, and we expect to see additional funds flow into renewables, and we think we'll see that fairly quickly. But these VPPs are starting now. This is not something that's no longer a future concept type application. This is right now. They're operating at certain levels in Australia. There's VPPs in Germany. Japan has tens of thousands of systems under the Itochu name alone, already operating together through the GridShare AI. So the exciting part for us is being able to work and be part of that. As we mentioned on the call yesterday, we are getting early access to next generation technology, and it's that type of support we see from Itochu to make sure that Eguana stays focused on that development side for the best products and use their horsepower to roll out tens of thousands of systems. So the VPP movement is absolutely starting. It's very exciting, and we think we've got one of the better products on the market for virtual power plants, given the power control solution and the expandable capacity that the Evolve product line brings in both the cobalt-free and the NMC. So I think the excitement's going to continue to grow. The opportunity is going to continue to grow, and we'll keep the team focused here on making sure that we produce and develop the best tech and the best products on the market.
Okay. One last question. Looking out to next quarter, what should we be looking out for to evaluate the management performance on?
On the next quarter, I think what we want to see, and where we're starting to put some focus on the continued margin improvements. We know we're starting to see that profitability line come closer and closer. The increasing margin's been a big move from a supply chain perspective. We want to see consistency on the inbound material flow. That's going to be critical. But again, we're starting to look at ramping this up, and I believe you were successful in getting me to say we're targeting a plus 10 million quarter this year. That's absolutely the vision. That's what we're expecting out of the team. And the next quarter is going to be aligning those supply chain pieces to start to see more significant jumps in the quarterly revenue, kind of in that late spring, early summer timeframe. The other big one that, with everything that's happening, we don't want to get lost in the shuffle, is the development of the full home backup and the 10 kilowatt product. We see a massive market opportunity in the U.S. California systems are increasing. We also know now that the Hawaii market is starting to increase, looking for larger systems. So we want to see gross margin improvements. We want to see the 10 kilowatt product be sent out for certification. And we want to see that supply chain and particularly the diversification on the battery side continue to stabilize so that we can complete that transition into flow. And what that will do is that will allow us to significantly scale coming into the second half of this year.
Okay, perfect. Well, thanks so much for joining us, Justin. Congratulations on a great quarter. I'm just happy every time you guys beat that year over year. It makes that trailing 12 months continue to look like a hockey stick, and I'm really happy to see that you guys didn't sandbag us after being so supportive with a terrible quarter.
Yeah, the team is so excited right now, and we're starting to try and get the message out more. We appreciate your platform, certainly. So that we can engage with the investors a lot more. So thanks for having me today. Again, let me know when you got some time slots, and I'm always happy to talk to you guys and the shareholders.
Awesome, we appreciate it. Next time, let's get some mugs made, and we'll do a giveaway to the shareholders.
You know what? I'll tell you what. If you want to set something like that up, and I know you are lined up with some of the retail guys, I'll send some mugs and some Eguana swag over to you, Steve, and have some fun with the shareholders and put something together and let's absolutely make that happen. I think it's a fantastic idea.
Awesome. Well, thanks so much for joining us.
All right. Thanks, Steve. Take care.
Okay, perfect.
One thing I just wanted to quickly add there, guys, is Steve, you mentioned that Cormark had put out a note. Cormark didn't formally initiate on the company. However, they did basically call them an emerging idea. And essentially they headlined with Eguana Tech is at the very forefront of the growing wave of energy storage. We had young Justin cover that right before we went live here. So for anyone looking for that, it's on the website.
He's young. His name's Justin, and he loves sell-side analyst reports. He was tweeting yesterday about how I tried to talk him into managing the deep dive TikTok feed. And I saw that. That's great. Great commentary. Okay, let's pull on Mr. Williams. James, can you hear us? Uh-oh. We're not getting a great quality feed. There he is.
Oh, here we go. Hey, guys.
Okay, perfect. Hey, James.
Been too long. How are you guys doing?
Oh, we're doing good. It's the first time that you've actually been. We were talking about doing a video with you back in the summer.
Yeah, when it's still an idea in just your head. Yeah.
Yeah, and
finally, I got something to talk about now.
So, okay, so you guys, let's first off, before we even start talking about the report you just put out, let's talk about what is the Cannabis Manufacturers Guild.
Yeah, thanks. So Cannabis Manufacturers Guild is actually a number of companies, but overall we look at ourselves as a solutions company for the cannabis industry. Obviously everyone who's followed the cannabis industry knows it's no easy time these days. A lot of money came into this industry. A lot of promises were made. And now we're kind of dealing with the fallout in that bubble bursting. But through that change and chaos, if you will, there's a lot of good operators who just need a little bit of assistance in any part of the supply chain, and we assist with that. So we have a trading business that moves biomass and contract manufacturing and equipment now. We have an agency that builds brands. We have a service company that pretty much just takes our entire network and cross-sells it across the entire industry. And we just announced that we're launching an advisory firm called Rivet to help with all those, capital M&A strategy needs that the industry certainly has in this next wave of consolidation. So, we're a membership guild. We represent about 24 members and speak with probably over 150 companies now. And we're really just here to add smart solutions that focus on profits and driving companies to higher routes of revenue. And we do it through a collaborative model where everyone gets to, talk to one another and share ideas, and it takes a village in our mind.
Okay, so obviously Jay and I have about 1 million questions for you about
All the dirty details about the cannabis industry. Yeah.
Okay, so let's get the elephant out of the room. Canadian cannabis LPs, it's been a disaster, and that's probably the kindest way of putting it. As far as I know of the public operators, nobody makes money consistently. Do you see a path for let's start with the big guys. Do you see a path for them to turn this around and actually start generating like material cash flow, material EBITDA?
Yeah, I mean certainly, right? But when, how much pain can they take, and who's paying attention at the end of the day? Is it really thing that matters for equity prices? Look, there's a number of guys making a good shot at it. Look at Indiva, right? What they're doing with the Eguana gummies and how they right size themselves, and they're a lean operator. Lean operators will win in this game. But look, everyone built billion-dollar companies and have SG&As that are 3 times higher than revenue. That was built on a mindset of where they thought the market was going to go, and it took probably 2 or 3 longer than they expected, and now they're having to deal with that. I think one of the biggest challenges for this industry, where literally the price index on this market changes every 3 months at best. If you have inventory and you bought flower at 4 and now you're selling it at 2 because that's what the OCS wants, well, you're going to have to churn through that old inventory, and that's where the write-downs. And it's the same for the marketing teams and a lot of the layered teams who were trying to launch a dozen brands with 20 people. We're seeing now that most of those brands aren't actually going to take off, and maybe they're going to run with 2 or 3 at the end of the day. So there's a lot of that old guard and old money that needs to be flushed out of the system, and then you're getting to profitability. It's no easy ride to get there. Our forecast is there's going to be a lot more reduction in labor. There'll be more facilities being shed. 2020 was just the beginning of that, really, but it's going to take years to sell off some of these facilities, and they're going to be on people's books. So, tip my hat to the guys who thought about it first and initially. I think a lot of the mid-range and even smaller cap cannabis LPs are in a lot better position to grow. But groups like Tilray and Afra have a different mindset on how to right-size things. And maybe that'll be the solution. But not going to be easy, and there's not going to be it's not going to be as full of names as 2020 was.
So you've got a bit of a unique insight to the cannabis sector in that your past is public, but right now you're more so the private side of things, right? So can you tell us just how well financially these private operators are doing? Just because I've long had this hypothesis that the people that are actually better off are the private operators, because they're clearly better at operating based on their ability to stay private and not access these massive small cap markets right now.
Yeah, and it really ties into our philosophy of having a network across the supply chain, right? I mean, early on, and it's no fault of the big LPs, and everyone who had to make a product and launch a product and get into the OCS, you had to grow it, process it, and then send it out the door. Now there's a group of operators who are saying, look, I only want to make hash. I only want to make vape pens, and this is my narrow focus, and I'll be the best at it. Where we come into play is that they don't need to do everything. They don't need to have a fully sales list. They don't need to cultivate their own product. We can put all those things together for them. Now, those operators are the really lean guys. We love companies where the CEO turns on their extraction technology. Those are the guys who are going to be able to eke out profits and polish the cash flow. It's not going to be the guys who are waiting for a sales license, are still in the queue, but have already dumped $1 million into a brand and a sales team and are hoping that once they get to a fully licensed facility, they'll actually be able to monetize and drive an ROE off that. So it really depends what type of private operator you are. If you are, I'm going to take the entire world over and I'm going to do it better than everyone else, no, they're probably not in any better shape. If they're the guy who say, I'm going to focus on this, scale it properly, and then move on to my next, big project, they're probably at a little bit better of an advantage. But, again, to my earlier point, when prices are changing every 3 months, and typically it's in the downward direction, a very bad investment on biomass or an extractor that may no longer be the most efficient market, and a new guy's coming and they're eating your lunch essentially from a business standpoint, it's very difficult to to stay ahead of the curve. And that's really kind of why we wanted to write a report like this. It's not a report that's bent to Bay Street and where equities are going. It's meant to be a report that allows business operators to have access to information that they can make better business decisions on. They need to be able to figure out, in 6 months, am I selling isolate at $15,000 when the price is actually at $6,000? If I don't know that, for 6 months, I could be completely out of the realm of realistic expectations. So that's kind of the driving force of what we want to deliver. At the same time, obviously taking contributors like our Vessel and Ben Ray at Sustainable Packaging as, groups who have important insight that the rest of the industry should probably be paying attention to.
How much do you think quality matters over price from your analysis, observations?
Look at the OCS data. There's a reason that the value category churns 5 to 10 times higher than all the other categories. But don't get me wrong, there is a market for quality cannabis. I still think we're at an infancy stage where consumers are more interested in trying different things and rotating between brands than applying one brand loyalty to one thing. I mean, there's only 4 different hashes on the market. You're telling me that this is the best and everyone's going to, this is what I'm going to buy for the rest of my life. It's not going to happen. So, but quality is something that will turn a customer off very, very quickly. But, I'm not a big fan of Smirnoff vodka. I don't know many people who really are, but they're selling, they're Smirnoff, right? And there's going to be that value, a value perspective related to brand as opposed to quality, but there is obviously a minimum bar. Moves what the OCS is making in regards to not bringing on any harvests that are pre-November 2020. Well, that's a clear direction of what they think is quality in regards to freshness. That makes sense, right? And that's what everyone's going to have to deal with, and they just kind of reset the bar there. So, quality matters. Price matters a lot more. Having a brand that'll eventually resonate where you can, just give what exactly you're promising to the consumer. Haven't seen that really yet or take off, but that's going to be coming next.
So you were a former analyst of cannabis was it Laurentian?
Laurentian is kind of where I, really started dabbling with the weed stocks. Yeah.
So and then you worked at WeedMD, so you've really got to see sort of both sides, the capital market side, the operator side. How much of a myth do you think Germany and Europe was in this whole, because we see it from the perspective of the retail investor in Canada. We were always told Germany. That's how this all makes sense. Is that still like a thing with all the operators you talk to?
I still think there is a push for Canada to want to be an international provider. I think Health Canada didn't do anyone any favors. I think the industry as a whole mandating EU GMP flower. I mean, there hasn't been a new EU GMP license for like over a year. I think Zen Abyss was the last one who had a tie to an EU GMP related news release. But look at markets like Israel. Over the last quarter, they just changed their minds on GACP flower. Now it's EU GMP flower. Another thing the industry doesn't know is they're testing for so many new pesticides, Canadian market labs can't even test for them. A project that we're working on with one of our members is, look, if Canada wants to be a supplier to Israel, they need to test for the 300 plus pesticides that Israel requires, and they also need to be EU GMP. So the bar keeps raising, making it difficult for Canada to compete. I understand why it's an easy narrative to, send 10 cases of cannabis over to Portugal and look, I'm an international distributor now. Great, good for a press release. Doesn't really add a lot to the bottom line, and having gone through a lot of those contracts, they're throwing a lot of legal dollars at it.
Okay, so let's talk about your report. You're calling out for, let's pull this up here, the winners to be vapes, gummies, and hash, the losers to be tinctures, gel caps, and chocolates, and you think beverages are going to be a surprise along with hydrocarbon extracts. I don't even know what hydrocarbon extracts means, but maybe walk us through sort of those high level segments and why you came to these conclusions.
Yeah, so I mean, this is more of a 2020 look back, but I think it applies to the next 6 months. Vapes was obvious. There was a lot of, it's the category that's dominant in Europe, and it was kind of one of the easier products to make. Not easy for everybody, but certainly one of them in the retrospect. We even commented in this, though, there's already a culling on distillate vapes. The provinces have too many of them. Some of them aren't moving. If you go on to the OCS or Alberta, you're going to see a ton of them with really no differentiation. So it's a very cutthroat category. However, coming, and it goes to your point on what hydrocarbons are. Hydrocarbon is a different form of extraction that utilizes butane or propane. The result of that is it's a much more robust flavor profile and keeps the terpenes, and it's what you see really taking off in the markets like California, Washington, Oregon that are legal in the US. The problem was in 2020, there was only a handful of hydrocarbon extractors and there wasn't a lot available. And, putting that kind of product in a cart is an R&D exercise within and of itself. So I think the issue was in the surprise categories like beverages and hydrocarbons, access to some of these products that the market thought would be there just weren't really there. Now they're coming. I think our opinion on beverages is a little mixed. We're seeing powders and teas and products where consumers can actually, make their own drink and flavor it themselves is going to be more sought after than some of the fully formed cans that we're seeing. But we need to see more competitors in that landscape. Gel cap tinctures and linguals, those products are just the reticence of the first products that came out of the market in 2018. They've been replaced by gummies and chocolates and much more products you'd see in the normal illegal market. It's just a factor of people were dealing with a limited amount of products at the time. Now our portfolio is much more robust, but we're very excited that concentrates, these fully butane vape pens will make a good splash in the market in 2021.
So one thing that I always have a struggle with is you mentioned that there's different types of vape pens. What do you do from a branding perspective so that consumers know that not all vape pens are created equally, first? And second, how do you discern which are the high quality and the low quality? To me, an inexperienced consumer, sure, I consume, but I don't put that much effort into it. To me, they look the same. How do I know which is going to be a higher quality versus one another?
Yeah, our partners and members, Vessel, they're a California-based hardware company. They wrote an article and they really touched on this subject. There's a lot of work that needs to be done on creating brand image. I think a perfect example of this is Skull vodka, right? It's going to cost a lot more to make that Skull bottle, but that's your differentiating point. When you walk into a store, you have a product that looks different, feels different, allows the brand to build an image around itself to convey to a certain consumer segment. In the vape market, unfortunately, there's 3 or 4 vape, cartridges coming out of China. Everyone's using the same stuff, and the consumer is, sucking on a vape pen that, from 3 vape pens ago, it doesn't taste any different. The differentiation, the ability for a brand to stand out is extremely limited by the hardware that's available. And that hardware was largely chosen because, one, everyone needed to be safe and be tested in CR, and there's only so many companies who did that. And then secondly, it was all that's available, and it was all that you could actually buy fairly cheap. I still think Canada's at a massive disadvantage with the amount of tax they're having to pay. If I want to put out, a 1 gram vape cart for, call it, 80%, I'm paying $8, $9 in taxes on it. So, the producers are making decisions based on margin, where real brand companies do it based on consumer value and, the actual consumer proposition that needs to be targeted.
I see beverages you guys are pretty bullish on in your upcoming forecast.
It depends. It's coming off a low base. It was only 1.5% of the category. We don't see it really climbing to more than 2 or 3%.
Yeah, there's still 2,000% growth.
Hey, but if you put up a $30 million bottling facility and you don't have hundreds of millions of cans going out, it's going to be tough.
Okay. Fair enough. What do you see as so let's talk retail investors. They're looking at these cannabis names that are publicly traded. I know you have a lot of thoughts on the space. I don't know what you're willing to say, what you don't want to get into, but how would you look at some of these names right now? Do any of them interest you, or do you think that it's kind of over?
I look at, I mean, I guess we have an advantage. I don't look at stock prices anymore. I mean, you know, my old Bay Street alma mater would probably call it a sin, but we don't trade stocks. We don't trade stocks in our members. We don't really give our opinions on them. I guess because we have, you know, a unique advantage where we get to talk to some of these people running these companies and even the ground level forces who are making things happen. What I would comment is there are some serious brain power being added to some of these companies, big, small, medium. The CPG guys are certainly here. I think they took a little bit of a backseat to pharma, but I mean, you know, I'll give it credit to groups like Oxley. You know, they're focused on a category. They're going after vape pens. They're adding products. They're being novel. They're talking to the retailers. This is a tobacco type strategy, battleground, and they're selling well. You know, that's kind of what we focus on. Look at what Indiva is doing with the Eguana gummies. They're just owning market share. They're focusing on a category. They're pivoting when they need to. They're lean. And those are the companies we get more excited about. Again, you know, I'm not going to make suggestions on stock, but there's certainly some good companies. What will be interesting to see is when the big groups with capital will start recognizing some of these trends and either scoop them up early or, you know, try to do creative deals, and that should add value to shareholders.
One of the big talking points, and I know we've talked about it in the past when we've hung out, it's just a common talking point amongst Canadian cannabis investors, at least on the public side, on FinTwit, so probably more retail guys, that you can't grow good cannabis outdoors. And I know you were with WeedMD, so you got to see it firsthand how that turned out. What's your thoughts on outdoor grown cannabis?
I mean, I got some stuff that I grew outside. It's fantastic. I love outdoor grown cannabis. There's a market for it. I mean, there's those products flowing through the channels now, and consumers are buying them. And they're completely happy. Are they charging $8-10 a gram? No, and they shouldn't be. I think, you know, we talk to a lot of farms. There are some 25-30% cultivars out there. From a potency perspective, they are awesome. From a Health Canada loophole and hoops you have to jump through, they're a nightmare. You know, we had a farm that for no reason of its own and no real understanding why got hit with a heavy metal contamination. That can happen like out of the blue, right? And you put a bunch of heart and money into getting a crop up for 4 or 5 months, and then pretty much become unsellable due to some of the slightly, I would almost call them, you know, overly encumbering regulations. You know, E. coli contamination cannabis, that's at levels that are 30 times, you know, more minute than what you'd get on lettuce, right? Why? So I think there's still some rejigging in the lab side of it and what constitutes, you know, a contaminated product versus not, but it's not going to hit the market, and it's going to be a significant drag if you mess up your crop. But it's out there, and the extractors like it. It's just going to come down a lot in price, right? I mean, you know, we think there's hemp trading at $40 a kilo now. Outdoor cannabis, despite being more potent in THC and costing a lot more to grow, you know, maybe $200 a kilo is what it's going to come down to, or 20 cents equivalent. So it's the margins are certainly tightening for the cultivators.
So going forward, what do you see as the biggest opportunity for the space as a whole?
Ooh, it's tough because I think it's a market where there's a lot of competing forces. So, you know, there's a little bit of game theory here, and unfortunately, you know, as one company pivots in one direction, that may, you know, relieve inventory burden, someone else kind of comes and picks it up. That still needs to clear out. I think the opportunity is for, you know, companies to start looking at their consumers and brands and pulling apart their extremely bloated organizations and just working with groups to say, you know what, I'm not going to make hash. I'm not going to make, you know, vape pens. My True Partner Extracts or Icor Industrial, you know, let them take on that heavy lifting, and that'll create a much more higher quality product. There's still a lot of, you know, animosity from the consumer level on what, you know, is going into these packages. You got to give the consumer a reason to trade out from the illegal market where they're completely happy. And if they're going to replace it with a legal product that's below their expectation, there's some issues there. However, There are a lot of new micro indoors groups who are just focused on being the best grower, and we are matching them with the best processors and distributors, and it'll make a better product than someone trying to do everything in-house.
So in the same breath, and what do you think is the most underappreciated challenge within the space? I feel that retail investors seem to largely focus on not necessarily the right items. So what do you focus on that few others do?
I think it comes. I mean, we're not the only ones, but certainly working capital management. We look at deals in a way where the traditional is raise a bunch of money. I'm going to do it all myself, and off we go, and let's put hope it works out. For us, we try to de-risk our deals by working with supply chain partners who know exactly kind of what they're doing and have a track record there, and then we fill it in with some obvious need, right? I mean, whether that's sourcing flour or finding a manufacturer for different novel products or putting it through a distributor and actually getting to market. A lot of the value can be created not by throwing money at the problem, it's by throwing smart people in collaboration at the problem. And I think our motto has always been, we're opening our doors. We love hearing what everyone's doing. We love making introductions to groups who think in the same way as we do and are willing to work together. I'm hoping the days of everyone having their back up and being worried to look over their shoulder. No one's doing anything super novel that hasn't been done before. But it's about utilizing the assets effectively and getting a return on them. But there's also going to be some groups who are going to go by the wayside because they want to do everything by themselves.
So one last thing that I have on my plate to ask you is, I know they're a client of yours, they're a client of ours, so full disclosure all around. Willow Biosciences, they are near commercialization of biosynthesized CBG, and now they just announced THC as well. Yeah. What sort of impact do you think biosynthesized cannabinoids is going to have on the space?
Yeah, I think it's gonna be huge for the global market. It's not just a Canada play by any means. It's really smart people. They have a great track record coming from the opium market, and I know they'll be working on a few more exciting things. But people look at biosynthetic cannabinoids and say, "Oh, I wouldn't want to smoke that." No one expects you to smoke that. If you want beverages to take off and you want Pepsi to step up and actually put 100 million cans on the line, they're going to go to a processor like that who's making a very sustainable product that doesn't change by crop. It just doesn't change. It's the same over and over and over again forever. And then the fact that they can do things like CBG and the rare cannabinoids, like THCV, is going to be a massive market only on the basis that, it's a hunger suppressant. If you could put hunger suppressant in a drink, everyone and their mother would be drinking that stuff, especially in COVID times, right? So it's that ability to go beyond what I think traditional cultivation can do. I know there's obviously some fear about it. People don't understand what biosynthesis means. Check your drug cabinet. Most of those products are made biosynthetically or synthetically, and most people are consuming them. So it's not something to be afraid of. I know it may not be the full entourage effect that people are going for, but this is a completely different category of product. This is going to pharma. This is going to the groups who believe that CBD is going to cure cancer one day. That's the input for Willow and biosynthesis. And the fact that they haven't been found by a big group like Altria or some of the other guys, it blows me away. I hands down think they're some of the smartest guys in the room. Okay.
Well, James, thanks so much for taking the time out of your day to come and chat about your 2021 outlook. This is available to the public if they want to read the full report?
Yeah, it's available on our LinkedIn, and it's on our website as well. So we did it for the industry. We're glad we got a lot of positive feedback from it, and hopefully we'll be putting out more of these things.
Yeah, it's fantastic. Got lots of stats and things that we don't always hear about because we're told one tale from the public operators, and we don't get a lot of consultants that are coming out with these sorts of things. So we appreciate all the data. And if you're looking to know more about the Canadian space or the Cannabis Manufacturers Guild, I highly encourage you to check out their website. Thanks for joining us today, James.
Thanks, guys. Appreciate it.
Okay, so Jay, quickly, what do we have going on the rest of the day at the Dive?
So the rest of the day and this weekend, given that it's finally Friday, Right after we go off air, we will see the daily dive posted, which has Jamie, and I'm sorry, I'm going to butcher this last name, Rozaninski, the founder of Wall Street Bets. He joins our host Cassandra to talk psychology and everything else related to just the rise of Robinhood as a whole, what it's meant for financial markets, etc. Wall Street Bets has had a big role in moving a lot of markets, whether or not certain people want to admit it or not. Outside of that, we've got some more macro this afternoon. As always, this weekend, we've got at least 2 stories coming out on SPACs by our writer, Braden Mackey, as well as we've got some great analysis by Jim McFadden. And then as well, we will also be launching our company profiles on Spruce Ridge Resources, SHL, and Newlock's Gold. I don't know if those will be Saturday or Sunday yet, but they will be out this weekend. You've got my promise on that. And then lastly, just before this, we went live with Young Justin and that note on Eguana by Cormark.
He's young. His name's Justin, and he loves sell-side analysts. All right, Jay, give him the disclaimer.
Alrighty, we are here for entertainment purposes only. We've got strong opinions, but we all know what an opinion is worth. Neither me nor Steve, and I don't know about our guests. I'm going to say they do not have any financial designations or licenses to make recommendations. So take it as you will. Opinion only, and yeah.
Okay, well, guys, we had a good week. There's lots of money flowing into the sector. It's lots of great news. It's fun to be getting to cover these small caps during this time. I don't know that it's always going to be this great, but my goodness, is it a lot of fun right now covering small caps and following the small cap markets as we're going through this just very interesting time. As more and more money flows in. So the one thing I'd encourage everybody is make sure you're taking chips off the table as your stocks run, because things are never as good as they seem when they're going good, and quite frankly, they're never as bad as they seem when things are going bad. So enjoy these times. I know everybody's making a lot of money, they're having a lot of fun, but unless we're going through some sort of hyperinflationary experience here, or I don't know, maybe small caps are just totally repricing, which would be fantastic. Even still, there will be a flight to quality. So just be careful. That's all that I'm saying. Have a great weekend. Could have spent your last hour staring at any screen, any computer, doing anything. You chose to spend it with us. I appreciate that. We'll see you guys on Monday. Oh, we're gonna have Steve White from Harvest. I'm looking forward to that one. All right, thanks, guys.